An AI trading bot claims it can trade crypto for you while you do absolutely nothing. No chart watching, no technical analysis, no sitting at your computer all day trying to guess whether Bitcoin is about to go up, down, sideways, or completely ruin your afternoon. So I wanted to know one thing. Is this actually a simple AI passive income tool? Or is it just another shiny crypto trap dressed up with the word AI? Today, I'm going inside the platform, looking at the dashboard, reviewing the strategy results, checking the risk controls, walking through how it works, and giving you my honest verdict on whether I would actually trust something like this with my own money. And make sure you stay until the end, because there is one number on the dashboard that matters way more than the profit number. And beginners usually ignore it. Disclaimer: before we go any further, I need to be very clear. This video is for educational and entertainment purposes only. I am not a financial advisor. This is not financial advice. Crypto trading is risky. AI trading is risky. Leverage is risky. Automated trading does not mean guaranteed profit. You can lose money. So please do your own research. Start small if you test anything, and never risk money you cannot afford to lose. Now that YouTube, the SEC, my accountant, and my nervous system are hopefully satisfied, let's get into it. If you're new here, my name is Margot, and on this channel, I test online income ideas, AI tools, digital products, and side hustles to see what looks useful, what looks overhyped, and what might actually be worth your time. I'm not here to sell you the dream. I'm here to test the tools before you waste your money. So today, we're looking at an AI crypto trading platform that promises to make automated trading simple enough for regular people to use. The platform I'm looking at today is built around AI-powered crypto trading. The basic idea is simple. You connect your wallet, deposit funds, choose an AI trading strategy, set your risk limits, and then allow the system to place trades automatically. So instead of you sitting there staring at charts and trying to make every decision yourself, the AI strategy is supposed to handle the trading logic for you. That sounds amazing. But this is where I want you to slow down. Because when a platform says AI trading, that does not automatically mean safe. It does not automatically mean profitable. And it definitely does not mean passive income in the same way people usually think of passive income. This is not like putting money in a high-yield savings account. This is not like getting a dividend check. This is active crypto trading, except the trades are being handled by software instead of manually by you. That means the tool might make profitable trades. It might also lose money while you are sleeping. So the real question is not just, can this thing trade? The real question is, can this thing manage risk well enough to be worth testing? The reason this platform caught my attention is because it is trying to solve a real problem. Most people do not have time to become full-time traders. They do not want to study candlestick patterns for 6 hours. They do not want to watch crypto charts at 2 in the morning. They do not want to join 10 Discord servers, follow 20 crypto influencers, and try to decode whether someone's rocket emoji means Bitcoin is about to pump. Most regular people just want to know, can AI help me automate something complicated? And can that automation potentially create extra income? That is why this type of tool is so tempting. It promises simplicity. But simplicity can be dangerous if people don't understand what is happening behind the scenes. So today, I'm not just looking at the shiny part. I'm looking at the risk part too. When you open the dashboard, one of the first things you see is the benchmark area. This is where the platform compares its AI trading strategies against a basic buy and hold approach. In other words, it is trying to answer the question, would this AI strategy have performed better than simply buying Bitcoin and holding it? That is actually a useful comparison. Because if an AI trading bot is taking more risk, placing more trades, using leverage, or moving in and out of positions constantly, then it needs to prove that all of that activity is worth it. If simply holding Bitcoin does better, then what are we doing here? So I like that the platform gives you a benchmark. You can look at different strategy versions. Some may show stronger total returns. Some may show a higher win rate. Some may show a lower drawdown. Some may have more total trades. And this is where the beginner mistake happens. Most people look straight at the profit number. They see a green number and think, perfect, I'm in. But that is not how I would evaluate this. The profit number matters, but it is not the only number that matters. I want to know how many trades were taken. I want to know how long the strategy has been tested. I want to know how much the account dropped during bad periods. I want to know whether the performance was steady or whether it came from one lucky move. And most importantly, I want to know the maximum drawdown. Because drawdown tells you how ugly things got before they looked good again. Let's talk about maximum drawdown, because this may be the most important part of the entire video. Maximum drawdown shows the biggest drop from a high point to a low point during the strategy's performance. So, for example, if an account grows and then drops sharply before recovering, the drawdown tells you how much pain you would have had to sit through. And that matters emotionally, because it is very easy to look at a chart after the fact and say, "Oh, I would have stayed calm." No, you probably would not have. If your money dropped 10%, 20%, or 30%, you might panic. You might shut the bot off at the worst possible time. You might change strategies right before the original strategy recovered. That is why drawdown matters. A strategy with a huge profit number but a scary drawdown may not be right for a beginner. A strategy with a slightly lower return but smoother performance may actually be easier to stick with. So when I look at these AI strategies, I am not just asking which one made the most money. I am asking which one I could actually tolerate using. That is a very different question. Another number that gets people excited is win rate. A strategy might show a high win rate, and that sounds amazing. But win rate by itself can be misleading. A bot can win a lot of small trades and then lose one big trade that wipes out a large chunk of the gains. On the other hand, a strategy with a lower win rate can still be profitable if the winning trades are much larger than the losing trades. So I would never choose an AI strategy based only on win rate. I would look at the full picture: profit and loss, drawdown, number of trades, time period, consistency, risk settings, market conditions, and whether the strategy has survived more than one type of market. Because crypto does not move the same way every week. Sometimes it trends, sometimes it chops sideways, sometimes it suddenly drops, like it saw my grocery bill. A trading bot needs to handle more than one mood of the market. One thing I do like about this type of platform is that it appears to show trading activity. You can see open orders, closed trades, trading history, and performance data. That is important, because if a company is going to say, "Our AI is trading for you," I want to see what the AI is actually doing. I do not want vague claims. I do not want mysterious screenshots. I do not want someone saying, "Trust the algorithm," while hiding all the details. I want to see the trades. I want to see the results. I want to see the risk controls. I want to see whether the platform is being transparent about both wins and losses. Now, transparency does not guarantee performance, but it does make the tool easier to evaluate. If I cannot see what is happening, I am not comfortable using it. The platform also describes itself as non-custodial. That means you are not simply handing your money over to the company and asking them to hold it for you. In theory, you keep control of your own wallet and funds. That is a positive feature. But I want to be careful here. Non-custodial does not mean risk-free. You still have trading risk. You still have wallet risk. You still have bridge risk. You still have platform risk. You still have smart contract risk. And you still have the biggest risk of all, not understanding what you are doing. So yes, I would rather see non-custodial than custodial. But I would not let that one feature make me careless. You still need to protect your wallet, understand the setup process, and be careful with approvals and connections. The setup process is designed to be simple. First, you connect your wallet, then you deposit the supported stablecoin. After that, you bridge the funds to the trading environment the platform uses. Once the funds are available, you choose an AI strategy. Then you select your settings, including how much capital you want to allocate and what kind of risk limits you want in place. After that, you can activate the bot. From there, the strategy begins trading automatically. That is the part that feels passive. You are not manually entering every trade. You are not deciding every entry and exit. You are letting the strategy operate in the background. But again, I would not confuse automated with safe. Automation just means the system can act without you. That can be useful. It can also be dangerous if the settings are wrong. The most important setup feature, in my opinion, is the ability to set a capital drawdown limit. This means you can decide how much of a drop you are willing to accept before the bot stops. That is a feature I would absolutely use. Because if I am testing an automated trading system, I do not want it running endlessly with no boundaries. I want a clear stop point. For example, I might decide that if the account drops by a certain percentage, the bot should close positions and stop trading. That does not eliminate risk, but it does create a limit. And beginners need limits. Because without limits, you are not investing or testing. You are just hoping. And hope is not a risk management strategy. The platform offers multiple strategies. Some may focus on trend following. Some may use grid-style trading. Some may rely on indicators like RSI. Some may be designed to adapt to changing market conditions. If I were testing this, I would not randomly pick the strategy with the biggest profit number. I would compare them. I would look at which strategy has the best balance between return and drawdown. I would look at how many trades it has taken. I would check whether the strategy has been live long enough to matter. I would look for consistency. And I would start with one strategy, not 3, not 5. 1. Because if you activate several strategies at once and something goes wrong, it becomes harder to understand what happened. When you are testing, simple is better. The platform also has a strategy lab feature, which is where things get more advanced. This feature allows users to create or customize AI trading strategies without needing to code everything manually. That is interesting because it gives more experienced users flexibility. You might be able to build a strategy around trend following, take profit levels, stop-loss rules, leverage limits, or different market conditions. But this is not where I would recommend beginners start. Because just because you can build a strategy does not mean you should immediately let it trade real money. A bad manual strategy is bad. A bad automated strategy is worse, because it can make bad decisions faster. If I were using the strategy lab, I would want to backtest first. I would want to see how the strategy performed historically. I would want to understand when it works and when it fails. And even then, I would only test with a small amount first. Backtesting is helpful, but it does not predict the future. Markets change, conditions change, and the strategy that looked brilliant in the past can fall apart in real time. The platform has different plan levels. The lower plan gives access to the live strategies and basic trading features. The higher plan appears to unlock more advanced tools, such as custom strategy building, backtesting, priority execution, and early access to newer strategies. Here's my honest opinion. I would not upgrade to the higher plan just because it sounds impressive. If you are a beginner, you probably do not need every advanced feature on day one. Start by understanding how the basic strategies work. Watch the dashboard. Learn the risk settings. Track the performance. Then decide whether the extra features are actually useful. A lot of people waste money online because they buy the advanced plan before they understand the basic plan. Do not do that. Paying more does not automatically make you more profitable. It just makes the experiment more expensive. Here's what I like about this platform so far. I like that it is trying to make automated trading easier to understand. I like that the dashboard shows benchmark comparisons. I like that users can compare AI strategy performance against simply holding Bitcoin. I like that the platform appears to show trade history and live activity. I like that there are multiple strategies instead of only one generic bot. I like that there are risk controls. And I like that more advanced users can experiment with custom strategies. Those are all positives. This does not feel like a platform that is only saying, give us money and trust us. There is at least enough data shown that a user can begin asking better questions. And that is important. Now let's talk about what concerns me. First, the results need time. A strategy can look good over a short period and still fail later. Second, this is crypto. Crypto can move fast, and automated systems can struggle when the market becomes extremely volatile. Third, leverage can increase both gains and losses. Fourth, beginners may overtrust the word AI. AI does not mean the system knows the future. It does not mean the bot cannot lose. It does not mean risk disappears. And fifth, the setup may still be intimidating for people who are new to crypto wallets, bridging, and decentralized trading environments. So while the platform may be simple compared to manual trading, that does not mean it is beginner-proof. There is a difference. This is not for someone who needs guaranteed income. This is not for someone who is behind on bills and hoping an AI bot will save them. This is not for someone who cannot afford to lose the money they put in. This is not for someone who does not understand crypto wallets or trading risk. And this is definitely not for someone who sees a green profit chart and immediately thinks, I should put everything in. Please do not do that. If you are going to test something like this, test it like a cautious experiment, not like a rescue plan. Here's exactly how I would test this if I were using it. First, I would start with a small amount of money. Not because I expect it to fail, but because a tool needs to earn trust over time. Second, I would choose one strategy. Third, I would set a strict drawdown limit. Fourth, I would track the results every week. Fifth, I would compare the results against simply holding Bitcoin. Sixth, I would not increase the account size until the strategy had performed consistently for a longer period. And seventh, I would keep notes. I would track the starting balance, ending balance, drawdown, number of trades, fees, and whether the bot behaved the way I expected. That may sound boring, but boring is good when money is involved. The goal is not to get rich overnight. The goal is to find out whether this tool is actually useful. So let's answer the big question. Is this passive income? Kind of. But not in the way people usually mean it. It is passive in the sense that you are not manually placing every trade. The system can run in the background. The AI can execute the strategy without you sitting there all day. But it is not passive in the sense that the money is guaranteed. It is not passive in the sense that there is no risk. And it is not passive in the sense that you can completely ignore it. So I would call this automated trading, not guaranteed passive income. That may not sound as exciting, but it is much more honest. Here is my final verdict. This platform is interesting. It is simple enough to understand. The dashboard is useful. The benchmark comparisons are helpful. The risk controls are important. And the idea of AI-managed trading is definitely something worth watching. But I would put this in the test carefully category, not the replace your income category, not the guaranteed passive income category, and definitely not the put your rent money in and hope for the best category. If you are experienced with crypto, understand the risks, and want to test a small automated trading strategy, this might be worth looking into. If you are brand new, nervous with wallets, or looking for guaranteed income, I would stay away until you understand the basics much better. My personal approach would be simple. Small test, strict limits, track everything. Do not trust hype, and let the results prove themselves over time. I'll leave the link in the description if you want to research it yourself. Again, this is not financial advice. Be careful, do your own research, and never risk money you cannot afford to lose. If you found this helpful, hit the like button, subscribe, and stick around because I'm testing more AI tools, digital products, side hustles, and online income ideas to find out what is actually useful and what is just expensive internet glitter. And if you want me to do a follow-up where I track results over time, let me know in the comments. Thanks for watching, and I'll see you in the next one.